And this speaks to the testament of how good the products are. We spoke to many customers, and the customers are very happy. They're increasing their spend. They believe in the product. So this isn't necessarily any hocus pocus in terms of the product not working. This is a solution that works and is being driven, and sales and marketing is being driven by success of those customers rather than.
The AI defense race is intensifying, and the leaders are beginning to stand out from the rest. Palantir just released its Q2 earnings, and the message is clear. It's no longer just a government contractor, it's becoming an AI powerhouse. The result? A new all-time high. But is this just liftoff, or the peak? In this video, we'll break it all down. Should you buy more, hold your position, or take profits? And if you missed the Palantir rally, don't worry. I've got 2 hidden AI defense stocks that might be the next to break out. But first, to celebrate reaching 1,000 subscribers, we're offering a free guide that explains how top investors identify breakout stocks before the mainstream. Check the link in the description. If you find value here, be sure to like, share, and subscribe so you never miss the next big opportunity. All right, is this just the beginning of an AI-first defense powerhouse? Palantir Technologies ticker PLTR just delivered another standout quarter, and the markets are paying close attention. Beating expectations on both revenue and outlook, the company's momentum in artificial intelligence is no longer subtle. It's accelerating. Analysts are taking notice, and so is Wall Street. Wedbush, a longtime bull on Palantir, just reiterated its outperform rating and raised its price target from $160 to $200, citing explosive demand for Palantir's AI products. At the heart of this surge, the company's artificial intelligence platform, AIP, is quickly becoming a game-changer. AIP, the engine. Behind Palantir's acceleration, leading the charge is Palantir's AIP, which continues to dominate the U.S. commercial segment. That division alone posted an astonishing 93% year-over-year growth and now makes up over 30% of total revenue. Even more impressive, U.S. commercial total contract value jumped 222% to $843 million, while overall contract value increased 141% to $2.79 billion. Wedbush analysts, led by Daniel Ives, are not mincing words. They see Palantir evolving into the next oracle of the AI era, a trillion-dollar opportunity in the making. With accelerating deal cycles and enterprise demand surging, Palantir is positioning itself as a key architect of the AI revolution. The market is rewarding that narrative. Following Palantir's blockbuster quarterly report, which revealed revenue exceeding $1 billion for the first time, the stock surged nearly 10%, extending its reign as the best-performing stock in the S&P 500 this year. After ending 2024 with a staggering 340% gain, Palantir is already up another 130% in 2025, widening its lead over other top performers like GE Vernova, which is up about 100%. What's driving the momentum? Several factors are fueling this historic run. Government contracts. Lucrative deals with government agencies remain a strong revenue pillar. AI adoption, excitement over AI's transformative potential keeps fueling interest from both institutions and retail investors. Retail participation. Palantir remains a darling among retail traders, frequently topping platforms like Fidelity in trading volume. Mentions of Palantir surged 375% on investment forums like Reddit after the earnings report, highlighting the stock's cult-like following. CEO Alex Karp, always attuned to the retail crowd, embraced this enthusiasm during earnings calls, acknowledging the support of individual investors. Looking at the financial milestones, breaking barriers. Palantir's Q2 results were nothing short of spectacular, with revenue hitting $1 billion, marking a 48% year-over-year increase. U.S. revenue surged 60% year-over-year and 17% quarter-over-quarter, reaching $733 million. Total contract value up 140% year-over-year. U.S. commercial contract value up 222% year-over-year. CEO Alex Karp stated, "We are guiding to the highest sequential quarterly revenue growth in our company's history, representing 50% year-over-year growth." In a letter to shareholders, Karp didn't hold back, declaring that critics have been defanged and bent into a kind of submission. Looking at the chart analysis, reading between the lines. From a technical standpoint, Palantir's chart is a masterclass in strength. Year-to-date performance, plus 129% with a clean, sustained uptrend. Key resistance levels, cleared with conviction after consolidating in April and May. The volume is rising steadily, indicating institutional accumulation rather than speculative retail-driven buying. The recent 7.86 surge to an all-time high of $173, triggered by the Q2 earnings report, wasn't just a resistance break. It was a strong confirmation of ongoing bullish sentiment. What's next for investors? With the subsequent earnings scheduled for November 3, 2025, investors have a multi-month runway to position themselves. Existing holders. The trend remains strong, suggesting it may be wise to hold through potential pullbacks. New investors, caution is warranted at all-time highs. However, a pullback toward the $160 to $165 support range could present an attractive entry point. Palantir isn't merely participating in the AI race. It is systematically being re-rated by the market as an AI-first defense powerhouse. The chart signals that institutional buying is far from over. As AI adoption deepens across industries and government sectors, Palantir's trajectory appears not just sustainable, but potentially exponential. For now, the smart money is watching and still building positions. What are your thoughts on the latest quarter earnings of this company? Are you buying, holding, or selling the stocks? Let's know below. The next breakout AI defense play investors shouldn't ignore: Bear.ai, ticker BBAI. In a market increasingly driven by defense-focused AI innovation, Bear.ai Holdings, BBAI, is quickly coming out of the shadows and rapidly becoming a name to watch. With shares soaring 86% over the past 30 days, the big question on Wall Street is now loud and clear. Could Bear.ai be the next Palantir? From under the radar to the front lines. Bear.ai isn't a speculative penny stock driven by hype. It's a growing defense technology company with solid contracts, a strong government pipeline, and a sharp operational focus that is beginning to deliver. Despite still trading well below its 52-week high of $10.36, BBAI has surged an impressive 514% from its lows, making it one of the most explosive comeback stories in the defense AI space. Even with the rally, Bear.ai's valuation remains attractive. The company trades at a forward price-to-sales ratio of 11.66%, well below the industry average of 19.3%. What's driving the surge? At the core of Bear.ai's momentum is real-world utility. The company has expanded its AI footprint across some of the most critical sectors. A $385 million backlog anchored by high-profile government work contracts with the Department of Defense, including the Joint Staff J-35 Orion platform and Project Linchpin international partnerships across allied intelligence communities, including strategic engagements in the UAE, from ConductorOS to ProModel. Bear.ai solutions are operational today, powering everything from airport surveillance to Amazon's logistics optimization. This isn't theoretical R&D. This is proven deployed infrastructure, leadership driving a strategic shift. Leading the way is CEO Kevin McAleenan, whose strategic shift has propelled Bear.ai into the national security and global AI arena significantly. Under his guidance, the company has established partnerships with Palantir, Amazon, and Autodesk, adding validation and institutional credibility to Bear.ai's technology stack. While recent headlines showed BBAI stock losing some ground after geopolitical shifts, including the U.S. temporarily easing tech export restrictions to China, these macro adjustments have had little direct impact on Bear.ai's core business. Volatility equal sign opportunity? BBAI remains highly sensitive to macro news flow. The stock declined 13.4% last week, even as the broader market also saw a correction. Despite the volatility, Bear.ai is up 90.5% over the past 3 months, highlighting its emerging leadership in defense AI. The upcoming Q2 earnings report on August 11th could be the next major catalyst. While formal guidance for the quarter has not been issued, the company's full-year forecast of $160 million to $180 million in revenue suggests continued year-over-year growth of roughly 7.5%. Investors will be watching closely for contract wins, revenue beats, and potential new partnerships. Looking at the technical setup, Bear.ai's chart is indicating the initial signs of a typical breakout pattern. A decisive move above $7.50 with substantial volume could ignite the next parabolic move. Pullbacks to the $6 support zone could offer strong accumulation opportunities. For existing holders, the trend and institutional interest suggest patience. For new investors, the current consolidation phase presents a potentially rare opportunity to enter before the next upward move. Could BBAI be the next Palantir? It's not just possible, it's increasingly plausible. While Palantir benefits from years of established government trust and significant commercial growth, Bear.ai is carefully following a similar plan, expanding its backlog, forming top-tier partnerships, demonstrating proven leadership, and focusing on mission-critical national security AI applications. For investors looking for the next hidden breakout in the defense AI sector, Bear.ai presents a strong asymmetric opportunity. In the comments, tell me, would you invest $1,000 today in Palantir or Bear.ai? Why? Let's debate it. Moving to the next stock, Soundhound AI ticker, SOON, is scheduled to report its Q2 2025 earnings on August 7th, with expectations of $33 million in revenue, a 145% year-over-year increase. In Q1, the company posted $29.1 million in revenue, up 151% year-over-year, driven by growth across restaurants, finance, and healthcare sectors. However, it remains unprofitable, with an estimated loss of 6 cents per share and $188 million in trailing 12-month losses. Despite being removed from several indices, SOON gained 43% last quarter, fueled by strategic partnerships with Tencent and Alina Health. The company forecasts full-year revenue of up to $177 million and holds a $1.2 billion backlog in bookings. Its Polaris platform and expansion into voice commerce hint at future monetization potential. Technically, the stock has formed a bullish cup and handle pattern, with key resistance around $14. A breakout could target $16 to $18 in the near term and $18 to $22 in the long term if macro tailwinds support AI momentum. Although lacking Palantir's scale and profitability, Soundhound offers significant growth potential in voice AI. It's not a safe haven investment, but for risk-tolerant investors, it provides a compelling speculative opportunity in the AI market. However, please note that this video doesn't constitute financial advice and is intended for educational and informational purposes only. Investing in stocks is risky, as past performance doesn't guarantee future results. We expect great potential in AI stocks, but we don't know which ones specifically, as we've highlighted some with stronger long-term fundamentals. Watch the following video.